Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I zoom in here, you'll see that I've left my lines on the chart from last week, and I'll describe to you how this all played out. Right here, this red candle showing a bearish engulfing pattern was the close from last Friday. And then we had a green candle on Monday, followed by down market Tuesday, Wednesday, and Thursday. With Thursday coming again within pennies of my forecasted low. Remember, this diagonal red line is what I drew last week after the close on Friday, and the end of that line represents my target. So you can see that the low from Thursday came very close to that, and then we bounced from there on the jobs report. Now, the jobs report was very confusing at first because the market rallied and then it pulled back, because as the numbers were analyzed, it's actually a disappointing number because the number of people out of work, out of the workforce in the U.S. represents almost a third of the population. It's absolutely incredible how the market could even rally on any of that, but we did. And again, I compared trading and analyzing the markets to analyzing weather, and I probably shouldn't have done that because we got hit by a massive hurricane here in Florida, and my home in Cedar Key was ground zero for when we had landfall. And so I'm not going to talk about the weather anymore for obvious reasons. Don't want to jinx things here. But the financial markets continue to be the most predictable I've seen in 34 years. So this is an example of how accurate the forecasting actually is. And week after week, I continue to display this and showing evidence through the videotapes here and through the analysis. So I'm going to erase that line right there, and then I'm going to redraw what I think is going to happen for next week. This blue line right there is a 20-period moving average. We did not close over that 20-period moving average. So what that means is the moving average right there for the diamonds is going to act as resistance. That's number one. Number two, when we rallied today on Friday, September 2nd, we did so on lower volume. The lower volume tells us that the buyers are not so committed to continue buying, and so that shows a lack of momentum. So what I'm going to do is I'm going to draw this line just like that, and I'm going to forecast that next week we're going to come right back down to test this low, which is now our newest and most recent support level. So that's my forecast for next week. Take a screenshot of that if you like. Just copy the screen right now, print it out, save it for next week so you can see how the market plays out and how accurate candle charts are. And little by little, your experience here with us will help you learn how to forecast and do it with great accuracy. So that's the diamonds. If I look at the spiders, that's a ticker symbol for the S&P 500 ETF. You'll see that I left my lines on the chart once again. My forecast was that we would go down, and I drew the support level, but I said that we would breach that line. I said we would probably go lower than that support level. And again, this is the S&P 500 within pennies of my forecast right there, and it did breach the line and then bounce. So this candle right here is called a doji. A doji is a sign of indecision, and it's usually found at a pivot point or a reversal point. So I'm going to remove my lines here, and I'm going to draw my forecast. I think that the S&P, like the Dow, it's going to come down and it's going to test that support level right there. I'll draw that support level for you as I did in the diamonds, and I think that will be our test right there. So again, very similar to the diamonds that we saw in the previous chart. If I look at the Russell 2000, well, my batting average continues with 100% accuracy here from last week. And as I zoom in to the charts, you'll see that this was my forecast from last week. With the Russell 2000, remember that's an index that represents 2,000 stocks. We came within pennies again of my low that I forecasted, and then we jumped up. Now the Russell 2000 is going to be slightly different than what we've seen in the other markets, mainly because, as I erase these lines, you'll see that this is a green candle that represents strength. Now the S&P did not show this kind of strength, so I'm going to say that initially the Russell 2000 is going to move up, and then it's going to pull down with the rest of the markets. I think that's what our forecast is going to look like, and I'll leave that line on the charts for you to analyze next week as well to see how it played out. If you'd like to take a screenshot right there, please do so, and we'll meet with you next week on the next market report. Now, finally, the VIX. The volatility index is something that I use as a tool to forecast the markets because it's always been considered a leading indicator to the S&P. I said that we would go down initially on the VIX. Remember, this is the forecast from last Friday. Friday was the close here with this bearish engulfing pattern. I said we would go down. We did on Monday and Tuesday, and then I said we would move up to break over that resistance line, and we did that on Wednesday and Thursday, and even today the high moved over that resistance line. The S&P volatility index right now is showing a big red candle. Now again, I don't want to confuse you here because this is not rocket science, but if I talk too quickly and use too much jargon, I actually can confuse some people. I think that the VIX is going to drop initially in the week to retest this support level from down here. I think that's what we will see. And then towards the end of the week, I think the VIX is going to go higher. Now again, why is this important? Because if the VIX goes higher towards the end of next week, it's inversely related to the S&P. So that means if the VIX goes higher, the S&P is going to drop towards the end of the week. And that's my forecast. If you'd like to learn more about what we do at The Market Guys, you can go to themarketguys.com. There's our front page. You can click on the video tab, and we have some free videos. And you can go to The Market Guys Facebook page. We have a lot of information that I put out this week. I put out a report that talks about what the Rothschilds believe is the next big financial crisis. That's an absolute must read, and I would encourage everyone to do so because there's some very important bullet points that come out in this article that could affect your investments moving forward. And for our Trade Alert subscribers, I do put out information for them as well to let them know when the trades go out, and it's just a good place to meet and get the information. So between the Facebook page and the Market Guys website, you have a lot of information that you can get from us, and it's all free. So have a great long weekend. We'll talk to you next week. The markets are closed on Monday, so I'll be back in the saddle on Tuesday and giving you a report at the end of next week as well. Have a good week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.